Welcome to Tony Byrne's View with news you can use. Tony has over 32 years of experience as a chartered financial planner and wealth manager. Tony's passion is to help you retire early and live the life of your dreams with no financial worries. Now to today's episode.
The advantages and disadvantages of investment bonds. Investment bonds, or to give them their correct title, single premium non-qualifying whole-of-life insurance policies, are unique investment products which are taxed under insurance company legislation. There are mixed opinions about investment bonds in the financial advisor community, so they are Marmite products. They are either loved or hated by advisors. Investment bonds are uniquely subject to income tax only when they are partially or fully surrendered, or in other words, encashed. Surrenders of up to 5% a year cumulative of the original investment are tax deferred, not tax free. This means that a tax deferred income may be taken for up to 20 years if the maximum income is taken. Bonds become subject to income tax whenever there is a chargeable gain, as evidenced by a chargeable event certificate which is issued by HMRC. Many investors confuse chargeable gains with capital gains. They are not one and the same. A chargeable gain from an insurance product such as an investment bond is subject to income tax. A capital gain, on the other hand, is subject to capital gains tax. There are onshore and offshore bonds. Onshore bonds are issued by UK insurance companies. Taxation is paid within the life office funds, and the investor is therefore deemed to have paid basic rate taxation at source. The taxation of capital gains and income is levied on the insurance company rather than investor. Offshore bonds, on the other hand, have no taxation deducted at source on the insurance company's income and capital gains, so the investor does not benefit from a basic rate tax credit. On the other hand, such an investor benefits from what's known as gross roll-up, which means that taxation may be deferred for many years, even decades. However, taxation will finally be paid on all investment bonds when they are surrendered, part surrendered, or the last of the lives assured dies. Offshore bonds are issued by offshore-related companies of UK insurance companies, and usually in local tax havens such as the Channel Islands, Isle of Man, and the Dublin Financial Services Centre. So what are the advantages of investment bonds? Inheritance tax mitigation if gifted into trust or used within a packaged inheritance tax product such as a loan trust or discounted gift trust. Trust investment. Long-term care fees savings due to exclusion from local authority financial assessment apart from any withdrawals taken, but deliberate deprivation rules need to be taken into consideration. Tax deferment, especially for offshore bonds. Income planning. School fees and further education planning. And finally, British expatriate investment due to 100% tax exemption for periods of non-residence, known as time apportionment relief. Then there are the disadvantages of investment bonds. Tax inefficient, as capital gains and income are subject to taxation unlike pensions and ISAs. Charges are relatively high, especially on offshore bonds. Complexity. Income tax on surrender, part surrender or death cannot usually be avoided, and frequent poor service and administration by insurance companies. So to summarise, investment bonds do have their place and are especially useful for wealthy investors, non-resident British expats, and indirectly for care fees mitigation. However, they do suffer to an extent from certain tax inefficiency and complexity too. When it comes to investment bonds, it is very much an issue of each case and its merits. Under certain circumstances, investment bonds can be invaluable. On other occasions, they are simply complex, and some of their taxation advantages can be illusory when taken into account the inevitability of an income tax charge one day. So if you are considering investing in investment bonds, do weigh up the advantages and disadvantages based on your individual circumstances. You know it makes sense.
Thank you for listening to today's episode. If you enjoyed it, don't forget to share it with your friends and family. For more information, head to www.wealthandtax.co.uk.